Every 4 years, something strange happens in the crypto world. Something that cuts supply, moves markets, and sometimes triggers massive bull runs. It's called Bitcoin halving. What is it? Why does it matter? And how does it affect you? Let's understand it. To understand halving, we go back to 2009. A mysterious person named Satoshi Nakamoto created Bitcoin, a digital currency with a fixed limit. Only 21 million Bitcoins will ever exist, not one more. This makes Bitcoin behave like digital gold, scarce, limited, and impossible to print. Bitcoin is created when Bitcoin miners solve complex puzzles. Every time a miner adds a block to the blockchain, they receive a reward. In the beginning, the reward was 50 Bitcoins. Then it became 25. Now it's 6.25. And every 4 years or so, this reward gets cut in half or more. That's why it's called Bitcoin halving. Halving reduces the amount of new Bitcoin entering the market. Imagine a gold mine suddenly producing half of its capacity of gold. Scarcity increases, and usually, prices rise. Bitcoin follows the same logic. Less supply, higher demand, historically, higher price. Let's look at history. 2012 halving, $12 to $1,000. 2016 halving, $650 to $20,000. 2020 halving, $8,000 to $69,000. The Bitcoin prices always goes high after halving. These jumps didn't happen overnight, but in the months after each halving, Bitcoin usually entered a strong bull run. But halving is not a guarantee of profits, and Bitcoin remains extremely volatile. Miners earn less, weaker miners shut down, and short-term price swings can be wild. Halving creates opportunity, but also risk. So the big question is, how does halving affect you? After halving, people rush to understand Bitcoin. This increases awareness and adoption of it. Crypto prices become emotional, they rise fast and fall fast. New investors may panic buy or panic sell. Because supply drops, Bitcoin becomes more scarce. For many investors, this makes Bitcoin an alternative to gold. Big companies, funds, and ETFs usually increase their Bitcoin holdings after halvings, boosting demand. In simple words, halving affects everyone who invests or wants to protect their money from inflation in long term. So that's Bitcoin halving, a simple rule that cuts supply, increases scarcity, and shapes the entire crypto market. If you want more global finance explained simply, subscribe to Investments Explained.